Hello, and welcome to this virtual presentation hosted by Pembroke on the topic of managing wealth during uncertain times, with a focus on the Pembroke Global Balance Fund. My name is Ian Aitken, and I'm the managing partner at Pembroke, a firm that has been serving the investment management needs of its clients since 1968. Today, we'll hear from David Whittall, the Chief Risk Officer of our firm, who is also a member of the Asset Allocation Committee. David will share some insights with you regarding the financial markets and introduce the global balance strategy so that you can better understand how it can help you achieve your long-term financial goals. With that, I turn the presentation over to David Whittall.
Thank you, Ian. That's a great introduction, and these are ideal times to talk about asset allocation and diversification. Long-term strategic asset allocation decisions require long-term inputs, like our return expectations, our risk tolerance, our time horizon, and liquidity needs. The challenge is that it can be very hard for people to maintain a long-term view when markets are so volatile day by day. During the first quarter of 2020, we've experienced unprecedented volatility, with our screens shifting daily between all red, everything down, and all green, everything up. I'm going to put a slide in here just to give an idea of what this looks like. On the left is a risk-off day. This is a typical day when markets are in sell mode, and you can see in the center column, every one of the rows of markets around the world is down at the same time. Then in the next image on the right, a risk-on day, we have a day when all global markets are up and it's green. This type of volatility is extremely challenging. Beyond the daily volatility is the difficult to predict pattern of global bond and stock market performances from year to year. In any given year, the top performing asset classes change. The top performing asset class in any given year may become one of the bottom performing asset classes in the following year. Look, for example, at this table we've created. The table shows 18 years of annual performance of various asset classes that you can see in the legend at the bottom of the page. Canadian bond indices are in dark green. Canadian stock indices in the lighter green and the tan, US stock indices in gray and black, and finally, international stock indices in blue and light blue. The best performing indices in each year are at the top of the table and the worst at the bottom. If you follow a single index, say the S&P 500, you can see that it travels from the bottom of the page, where it was in 2002, 2003, and 2004, to the top of the page, where it was in 2014, 2018, 2019. Looking at the table, it's clear that it would be very difficult to try and time the market and rotate into the best performing market in any given year. That's why we never advise trying to time the markets, but instead recommend a diversified portfolio. Knowing that, however, is not enough. How much should you diversify? Into which markets? When should you rebalance? The Pembroke Global Balance Fund provides a solution. The Global Balance Fund gives you diversified, long-term exposure to global bond and stock markets, so you don't have to time the markets. The automatic rebalancing feature means that the strategy's asset allocation to different stock and bond markets is fixed within specific corridors. Anytime an allocation deviates from its intended weight, the strategy is rebalanced back to its target weight. The corridors are wide enough to make rebalancing infrequent, but tight enough to keep investors at their intended weights over the long term. A diversified portfolio of stocks and bonds, rebalanced in this way, should deliver a steadier return without the peaks and troughs. To demonstrate that, we've created this second table. In this table, an additional row of white squares representing a 30% allocation to the Canadian bond indices and a 70% allocation to the Canadian, US, and international stock market indices has been added. This annually rebalanced portfolio benefits from the natural tendencies of bonds to deliver stronger returns in some years and stocks to deliver stronger returns in other years. These opposite movements in asset classes reduce overall fund volatility. That's the benefit of diversification. The Global Balance Fund is diversified by asset class and by active and passive management. Let's jump to the last slide and have a look at this. first pie chart on the left shows the fund's target asset allocation, which includes 30% in fixed income, 35% in a diversified global portfolio of small cap stocks, and 35% in a diversified global portfolio of large cap stocks. The second pie chart on the right shows how the fund is diversified by active and passive management. We use active management for about 80% of the fund in areas where we believe we have a competitive advantage. That's in small cap markets, emerging markets, and bond markets. In these markets, where information flows are less than perfect, we conduct our own research. We travel to visit companies and their competitors, and we pursue returns in excess of benchmark returns. In large cap markets, however, where many more analysts publish research, information flows much more efficiently. Here we don't believe we have a competitive advantage, and we invest passively with exchange-traded funds. These funds track the large cap indices, are large and liquid, and have very low fees. They account for about 20% of the Global Balance Fund. The benefit of this diversification by asset class, by region, and by small and large cap stocks, and by active and passive management is to deliver a portfolio with broad, global, multi-asset class exposure. The automatic rebalancing feature means you maintain this exposure in all market environments for the long term. The diversification between active and passive approaches helps reduce fees. Why don't I pause there, Ian, to ask if you have any questions or additional comments.
Thank you, David, for explaining the characteristics and the benefits of the Global Balance Fund. Before I ask you a couple of quick questions, I should point out that the Pembroke Global Balance Fund was originally called the GBC Global Balance Fund, and the fund was renamed during April of 2020 when the GBC family of funds became the Pembroke family of funds. You mentioned that the asset allocation in the fund is rebalanced automatically, but could be changed within certain limits. So my question is, who makes those decisions and on what basis are the adjustments made?
Great question. Pembroke has a 6-member asset allocation committee that meets quarterly to review the fund's asset allocation and the performance of the fund's positions. We maintain a strategic asset allocation of 70% equity and 30% bonds and cash. We have a tactical corridor of plus or minus 5%. So for example, the equity weight could drift as low as 65% or as high as 75%. If equities or bonds breach the edge of that corridor, we automatically rebalance. In addition to that automatic stabilizer, we have discretion to move within the corridors tactically. It's not our intent to be active tactical allocators even within the corridors, and we tend to keep the fund at its target allocation of 70% stocks and 30% bonds.
Thank you, David. Could you explain how the Pembroke Global Balance Fund is different from the other Pembroke funds?
Sure. The main difference is that the Global Balance Fund is a fund of funds. It's composed of Pembroke managed funds and externally managed funds. Our investment team at Pembroke remains focused on our core strategy of investing in US and Canadian small and medium-sized growth companies. The Global Balance Fund is a diversified portfolio of funds automatically rebalanced to maintain a global balanced portfolio.
Thank you for that answer. And finally, could you explain who this fund is designed for?
The fund is really designed for Pembroke's private clients who want a globally diversified portfolio of stocks and bonds that includes our North American growth portfolios, is complemented by exposure to global small and large cap companies, as well as high quality Canadian corporate and sovereign bonds. We really envisage the fund as a core holding for many of our clients.
Thank you, David. With that, we're almost out of time, so I would like to thank you for the presentation. I would also like to thank each of the viewers for your interest and encourage you to contact us if you have any questions about the Pembroke Global Balance Fund, or if you would like to understand how Pembroke can help you with your investment management needs. Thank you very much. Have a good day.